So, welcome to the financial intelligence session for today. This is a session that we hold on a weekly basis via Zoom. This is not about getting rich quick overnight, but instilling in you the skills, information, and education to build lifetime wealth that can be passed on to your children and grandchildren. I want to welcome every members of our groups to this session today. If you're joining us for the first time, you're awesomely welcome as well. We encourage you to join each session every week and do watch our previous recordings as each sessions are always a powerful one you cannot afford to miss. Make sure to invite your friends and families along next time. So, we usually like to ask this question: who is smarter? Is it you or your money? Is your money working for you, or are you sweating trading your time for money, like doing the 9 to 5 lifestyle and trading your time for money? So where do you stand? Basically, the ultimate goal of our weekly sessions is to educate us, to open up our minds to ideas and ways on how to convert our labor, into assets that will provide cash flow in return to our bank accounts, right? That is what our weekly meetings or sessions is all about. So it's time to learn how we can send our money on errand. So I encourage you to watch our previous session on our YouTube channel, as they are powerful sessions about financial intelligence and ways on how you can transform from an employee, like how you can transition from an employee or a self-employed person to become a business owner or an investor. So a lot were discussed. So I encourage you to watch all that we shared in the course of the last 6 to 8 weeks. Yeah, so we started in January and we ended last week on the first session. So those are the videos on our YouTube channel. So you can just take time to watch all of them. Like, they're pretty much awesome sessions. And I just put a snapshot of our financial intelligence sessions that we completed last week. And we will be moving on to more on this topic anyway. As I explained in the past, I will mix and match the information to be shared on this channel. Sometimes it may be a short video on how to become financially free that I'll post on the channel. I encourage you to subscribe and turn on the notification button once you are subscribed to the channel. Today, I want to share with you a very lazy and simple way to earn money in the crypto space. How you can make money in the market, whether or not the price is actually going up or down. I'm going to be sharing with you a very simple and lazy way, like pretty much anyone can do it this. So even if you're a newbie, like you're just new to cryptos, you can literally do this. Or if you don't understand technical analysis, you can still do this as well. So anyone literally can do what I'm about to share with you today. And it's a very simple concept, but powerful. But a lot of people don't understand it. And when I share it, like, a lot of people are, oh, yeah. And some people are like, oh, I should do that. Or I do that. People say all those kind of things, right? But it is very important, and I will be sharing with you. But this is important on one condition, okay? It has to be a long-term uptrend market. Very important that what I'm about to share with you, it's only valid and it's only useful and it's going to be only profitable to you when there is a long-term uptrend in the market. And I'll show you what I mean by long-term uptrending market on the charts once I hop onto the charts, okay? It basically means that the price has to be going up on a long-term basis. Of course, there will be fluctuations, but you will see when I up onto the charts and you'll actually understand better. If you're a newbie, right? You actually understand better. But before I do all of that, I think it's worth understanding what exactly cryptocurrency is all about. Because I do get questions from people like, you know, you'll be surprised that a lot of people don't know about cryptocurrency. So I think it's just an ideal if I just do a quick, it's not going to be too deep, but, just a quick overview of what this is all about, right? And what I want to do is I just want to share some very basic background knowledge about crypto. So, I mean, why would anyone want to invest in what they have no clue about, right? So, like I said in previous sessions, you got to learn and understand what you're investing in and not invest blindly just because others are doing it, right? So a lot of people in the world today invest blindly. They simply do what others are doing. They follow what others are following without doing their own due diligence. That is why when others are crashing, they crash along with them. So without any further ado, let's dive into today's session, folks. So me going through the basics means I'm just going to go through like a basic overview of Bitcoin's cryptocurrency and the blockchain technology behind it. I'm not going to be going in full details because obviously we don't have that time to do that, but I'm just going to go into like a very basic overview, okay? You can send bitcoins and receive bitcoins anywhere in the world as long as you have internet connection. Bitcoins is not controlled by anyone. No company or organization is behind it, and you don't need anyone's permission to use it or even open a bank account to use it. It is decentralized. It's not controlled by a single entity, right? And Bitcoins is an online digital cash, or we can say digital currency. So we have the blockchain technology. The blockchain technology is what actually make Bitcoins work. Okay. So without the blockchain technology, we would not have Bitcoin. So the blockchain technology is a database like no other. And you're gonna ask me why? Why is it a database that is not like any other database? For example, in Bitcoin blockchain database, you can only add, so you can only add and then track all transactions. Once added, it cannot be removed ever again. So this means it eliminates cheating and fraud. So in the blockchain database, once a data goes in, it can never ever be taken out again. Traditional database, you can add and you can take out. So those are the differences when we're talking about the blockchain technology. It's a technology that actually helps to eliminate cheating and fraud. And it means you cannot duplicate your bitcoins because it's all the transaction is being tracked on the blockchain technology. So all the transactions, like everything is tracked on the technology. So you cannot duplicate your coins. So once it's sent, it's sent. So you cannot duplicate it. So no one can claim any amount that doesn't belong to them. So let's break it down further. Blockchain is a network of computers talking to each other, okay? And blockchain is a public ledger because all the network of computers holds a copy of blockchain and keep track of transactions in the blockchain. It's also accessible to the public. So this is why a lot of people call it public ledger. When a transaction is made, a network of computers check their own local copy of the database, the ledger, and the blockchain to verify the transaction before the transaction can be approved. So those are just the basic things that I think it's important to know about the blockchain technology. So I will not go into too much detail for now because, like I said, this is a separate course on its own. So I will have a separate course or maybe a session that will be dedicated for this purpose. But it's nice to have a bit of understanding of what this is all about. So at the same time, we have something that we call provenance. So this is about tracking anything that is backed by the blockchain technology. So it's not just about a cryptocurrency. So any technology that's backed by the blockchain technology, remember it's a database. So anything you can think of that is backed by the blockchain technology, it's it can be tracked, right? So you can track and you can trace it. And all of this is something that I will be explaining in details, like whenever I want to have like a very detailed course about this, okay? And like I said, it doesn't have to be a digital currency. Literally, any organization can adopt the use of blockchain technology. For example, the blockchain technology can be used in the voting system or in the health sector to eliminate any malpractices or frauds in the system. It can be used in real estate sector and so on like that as well. So we have what we call the consensus. So which literally means several parties are making the final decision on a process. Unlike one party making the final decision, they can easily manipulate the process. So blockchain has a consensus system which actually eliminates the frauds and cheats. Before we dive in on the charts, because what I'm going to be showing you today, it's better and it's easier if I actually show you what I'm about to show you on the charts. So before I dive in on the charts, let's look at some benefits of the blockchain technology. So transparency, this allows the public to be able to view transaction ledgers. Remember, we said the blockchain is a um, network of computers, and it's also a public ledger. Okay, so the transparency in the blockchain, like when you're sending bitcoins, there is transparency in it. So anything that is backed by the blockchain technology, there is transparency in it. So this allows the public to be able to view transaction ledgers. This is an additional level of accountability in business, or in any business or financial system. Also, each domains within the business are able to act in honesty as well. So like everyone, the blockchain technologies enables everyone to be transparent because everything is seen, right? This enables like anyone involved in the blockchain technology, they have no choice but to be honest, right? Because if you're not honest, like what you're dealing with is, it's a public ledger, so everyone can see it. So you have no choice but to be honest. The next one is the security. Blockchain is a network of computers, like I already said, which confirms a block. Okay. The block formed is added to a ledger, and as a result, this forms a chain. Each transaction is encrypted and linked to previous transaction, so it's impossible to alter the complicated strings of mathematical numbers formed by the blockchain. And then the next benefit that we want to look into is the improved traceability. There is an audit trail present to the movement of everything happening on the blockchain. So this is done via the blockchain ledger. And then we want to look at the increased efficiency and speed. There is no need for middleman when using the blockchain technology. It also allows faster cross-border transactions through the use of digital currency. So, for example, if blockchain is used for the purpose of digital currency, there is no need to have a middleman. So it's just you and I, right? So I want to buy bitcoins from you. You want to? Well, I don't even have to buy. Like you want to pay for goods or services. So all you do is you obtain my wallet and then you send my bitcoins to me, right, in form of payment. So this eliminates the need for middleman. We have the reduced cost as well, which is part of the benefits, of using the blockchain technology. And because the blockchain technology has already eliminated the middleman, this cuts down a huge cost in several industries that actually implement the use of blockchain technology. So I just want to talk about those benefits of using the blockchain technology. So now I'm going to move on to the chart. So I'm going to show you what like the lazy way that you can actually make money in cryptos. Like I'm gonna be showing you on the chart, so because it's easier to explain that way. And then I'm gonna pull up my Excel spreadsheet, and then we're gonna do the numbers together, and you're gonna see how awesome is this. So basically, what I just did is I like to use the MT4, so it's easier for me. But I'll show you how you can do this on trading view as well online, but I just prefer to use the MT4 because I trade forex, so it's easier for me to do that way. So hold on a second while I share the screen. So what is the lazy way to make money in cryptos, or even any investment opportunity that is a long term that has a long term uptrend? So remember, I said something. There is a condition, and the condition is this market has to be going in an uptrend in the long term. So what do I mean by that? So I mean the price has to be going up over the course of a year, 2 years, 3 years, 4 years, 5 years, 10 years, 20 years, 100 years from now. So the price has to keep going up, which is in the case of the stocks market, right? Because most of the time, the price of the stocks keeps going up. But obviously, there will be times that the stocks market is going to crash, right? But when you look at the overall long term, you can still see that the price is going up. And I'm going to be showing you a few things here, like how you can adopt the same idea and make money in cryptos. Like even if you have no knowledge about technical analysis, or all you just want to do is again, I just want to say this, this is not about getting rich quick overnight. So this is not something that you're gonna do today and then tomorrow you're gonna you say, oh, I'm a millionaire. No, that's not what I'm showing you. I'm just showing you how you can make money in cryptos over the long term, and you can make an awesome, wealth for yourself. And I'm gonna show you an example here. So what I did was I started from uh, January 2020. Okay. So, say for example, you started what I'm about to show you back in January 2020, just over a year ago, just like 15 months ago. If you started what I'm about to show you right now, like in January 2020, you would see what you would get today. So, the lazy way to make money in crypto. So, this is what it is every month, right? So remember, it has to be like a long-term uptrend market. So if it's a long-term downtrend market, there actually, just to clarify, any investment usually is an up. It's going up in the long term. Okay, whenever an investment is going down, long term, that means it's probably like the company is crashing. So in the case of the stocks market, so that means that the company is no longer in service, and everything about them is dying. And then obviously you don't want to invest in anything like that. But in today's session we're talking about cryptos. Okay, and randomly I just picked Ethereum. I'm not going to use Bitcoins, but we can also do Bitcoins as well. Okay, we can, if you're going to be here, we can do whatever coins you want me to do, right? So we can do that, and then we see what we could have got, right? So let's say on the 1st of January 2020, you decided to invest in Ethereum. Okay. So you put in just $50. Okay. Now, whatever amount you want to put in, it's up to you. So you can put in whatever amount works for you. You can put in $10. You can put in $100. You can put in $1,000, and I'm gonna be showing you the maths behind this. Once I show you on the chart, I'm gonna bring up my Excel spreadsheet, and then I'm gonna show you the maths behind it, and then you can understand better. So, but for this example, I'm just gonna use sorry. I'm just gonna use $50 for this example, okay? Nothing crazy, just $50, okay? So on the 1st of January, you invested in Ethereum. The price of Ethereum at that time is $128, okay? If you look straight to the right here, you can see the price, you can see the price right there. Okay, so that was the price of Ethereum on the 1st of January. So you put in $50. Okay, nothing crazy at all. So now you rinse and repeat the same on the same day. Try to keep it like once in a month or even twice in a month, but for simplicity I'm gonna say once in a month. Okay, pick a date. So, I want to do this on the 1st of every month, or I want to do this on the last day of every month. Okay, it doesn't matter. I want to do this on the 15th of any time. It doesn't matter any time of the day of the month that you do this. Okay, so now the second month, which is the February, 1st of February 2020, you put in another $50, okay, into Ethereum. At that time, the price was 181, so the price actually went up. Okay, so now in March, again on the 1st of March, you put in another $50. Okay, at this time the price has actually gone up. Okay, so remember, you do not have to understand technical analysis. I'm just showing you on the chart, so we can see the price together. I'm going to show you on the Excel spreadsheet where I just put in some calculations so you can understand better as well. So you do the same thing in March, April. You invested, the price went down back to 128. In May, the price went up to $200. In June, the price went up to $36, which is not a lot anyway. In July, the price is around about 225. In August, the price is 380, right? Sorry, I'm not supposed to click. So the price is 380. Okay, so you understand what I'm saying? So you do the same thing on a monthly basis. And what I did was, say for example, you're someone that started this, just over a year ago. Okay, so we're just doing some maths here. So just over a year ago. So you do the same thing on a monthly basis. So January 2021, you invest another $50. So now you have you bought at the rate of 746, right? Again, you do the same thing in February, and then you do the same thing in March 2021. Okay, so that's 15 months in total, I believe. So now let me open up my Excel spreadsheet and show you some stuff, some crazy stuff that you probably would not, believe. So in January, remember, now this is gonna make it easier for you guys that don't actually understand, like what's going on the chart. So in January 2020, you invested $50, okay, in Ethereum, and the price of Ethereum at that time is 128, but I just put 130. So I try to bring it up a little bit. So, but it doesn't matter. You can put 128. It does. You should understand what I'm trying to explain anyway. So the crypto value of Ethereum that you actually got on that transaction. So you got 0.3846 Ethereum. So you didn't actually get one Ethereum because you only spent $50, right? So you got 0.3846 in terms of the crypto value. In February, you did the same thing. So you only got a value of 0.26, right? So in March, you did the same thing. You invested $50 only, okay? You got a value of 0.2174 because the price went up. In April, the price went down a little bit. You got 0.37. In May, the price is 210. Remember, every month you just invest in $50, okay? So June, you invested $50, you at the price of 240, and then you got 0.28. Okay, fast forward up to, like, let's just come back to 2021. So now the price is really really high in 2021, but you still maintained what you're doing, right? So you invested $50, okay, in Ethereum, but at the rate of $750 per Ethereum. So you only got 0.0667, okay, in terms of crypto value. In February, wow, the price went up really, really, is really, really expensive now. So you now got 0.0379, okay, in terms of Ethereum. So we're in March right now, okay? So we're in March. So let's say you're someone that actually understands this and you've been doing this for the past 15 months, okay? Listen, you've only spent $750 so far, okay? Now I want to tell you something. Every month you can, like, I'm going to use an example of like this part of the world, okay? So I'm going to tell you something. A lot of people that go to work here, like, people eat lunch, like they buy lunch and they buy breakfast, okay? So they spend literally about, on average, $15 to $20 every day, okay? So if anyone can actually spend $20 a day, just on lunch and breakfast, okay? And let's just be very, very conservative here. So let's say anyone can literally put away $10 every day, okay? Or, like, I know it's different in all parts of the world, but I'm just gonna use here as an example. And $10 is nothing, folks. Like, $10 is literally nothing, okay? So you put away $10 every day, you multiply that by 30 days, so that's $300, okay? Fair enough, fair enough. Let's just say you don't have $10 a day. You've only got $5 a day, okay? I'm just giving you an example. Like, so it's possible for someone to be able to put away just $50 on a monthly basis, that it's not going to affect them. They're not even going to feel like, oh, I put away $50. No, it's not going to affect them at all. So that is why I use $50, because I know I want to use a very low amount. But anyway, so far, and I'm going to use some figures, and then we're just going to walk around and see. So after 15 months, you've literally invested $750. If you were to come up with $750 at once, that would look too much for you to get at once. But because you're doing it on a monthly basis, or like tiny amount, you've invested $750 in the course of 15 months. Okay, look, your value, remember, you're only obtaining like very tiny chunks of cryptos, right? But now you've got 2.63 0.96 is worth of Ethereum. Your $750 that you've been, like all your $50 that you've been putting away on a monthly basis for the past 15 months is now worth 4,750. Let's just say 4,750, okay? So that is a growth of 533% in the course of 15 months, okay? So you can see like how you can make money in a lazy way. Like I know a lot of people, they want to trade. They say, "Oh, I'm a day trader. I do this, I do that." But this is just a lazy way. Like you can literally do this without, understanding technical analysis. The only thing that is important is the market has to be in a long-term trend. So remember, you're only putting away, and let's change these numbers and see what it's gonna look like. Okay, so now I'm gonna use the $300 that I talked about before. Okay, so I'm actually gonna use $150 just to be on a conservative level. Okay, so let's say someone is actually investing $150 on a monthly basis on Ethereum. Now, this is Ethereum, okay? There will be other coins that will actually give you more than this, and there will be other coins that would not give you as much as this, okay? But for now, let's use Ethereum, and then we can also use another example as well. So $150 on a monthly basis, okay, for the past 15 months, which is pretty much not going to be nothing. But now, wow, look at these guys. Awesome. Now let's do $300. Let's do $300. You can put away $300 on a monthly basis, okay? So after 15 months, and remember, guys, you can imagine what this is gonna look like after 2 years. So we're just doing, like, I just picked a random date, and I'm just saying, oh, let's just say someone started this like a year ago. The lazy way to make money in crypto. So far they have invested 4,500, okay, 4,500, and they've got Ethereum, which is worth 15.8 worth of Ethereum right now at the price of 1,800 as of today. So their 4,500 US dollars is gonna be worth 28,507 dollars. Do you know why this is powerful? If you invested $4,500 in Ethereum day, right? That is what you're gonna have. You're only gonna have an Ethereum that is worth 4,500. That is simply basically what it is. But because you're actually doing like on a monthly contribution, you're actually making a whole lot at the end of the day. Wow, look at that. You've put in 4,500. And remember, this is money that it's nothing to you. Like you could have used this money to go to the bar, or to the restaurant, or do all these kind of things, and then the money is gone. But rather than doing that, you decided to say, you know what, I'm gonna put this money in cryptos, and I'm gonna do this for the next 2 years. I'm gonna do this for the next 1 year. I'm gonna do this for the next 3 years, or I'm gonna do this for the next 5 years or 10 years, or however that would take you, right? So, and then you know what it is. So you guys actually understand what I'm talking about, okay? So you can decide to actually put it into two different coins. You can put it into three different coins if you have a lot to invest, right? So let's see. Okay, so the price of DOGECOIN is not showing until July. So let's start in July, okay? This is 0.003 as well. Where are we? 0.03. That's September, right? Okay, so now October. And let me know if you don't actually understand what we're doing, okay? Because it's very important that you understand. So this is 0.003 as well. In November, 9th of November. So we just picked the 9th. So you're doing this on the 9th of every month, okay? So this is 0.003 as well. So I'm just rounding, like giving it a round figure, okay? Because it takes time when you're trying to remember all those extra digits. In December, we do 9th of December, the price was 0.003 as well. So I'm just going to say 0.003 in December. And in January, 9th of January, the price would have been 0.009. Okay. And in February, the price would have been 9th of February, the close of the market. So 0.07. And in March, um, 9th of March, close of market 0.05 or 0.06. Let's just say 0.06, okay? And then the price today is 0.06. So your 450 in the space of 9 months would be worth $5,776 today, okay? So you can see when we did the Ethereum, it was 533 even in 15 months, okay? And Dogecoin gave back 1,184 in 9 months. So this is why you can try different coins. So I just picked Ethereum as an example, but you don't have to use Ethereum. You can use any coin that, as long as it's in an a long-term uptrend. Okay, very important. You want to make sure that the coin is in a long-term uptrend. Very important. As long as it's going up in the long term, you're gonna make a whole lot of money back of it. You're gonna make a whole lot. Yeah. So that is it, folks. Thanks for being a part of this session today. So you can reach out to me on WhatsApp, okay? I want to encourage you to invite others to join in future sessions as well. If you have any questions around about any topic or anything that we've talked about, there's no harm in reaching out. And again, watch the videos on that YouTube channel right there, because we talked about a lot about how you can transition from an employee to a business owner. Okay, so that's about it, folks. Have an awesome week ahead of you next week, and we're gonna catch up again next weekend. So take care, folks.